Welcome to the June 21st, 2018 update for the Income Millionaire Insider, and let's get started with the stock market reversal radar. Here we go, and as we can see very rhythmically, fairly predictably, these underlying stock market mood swings just travel between troughs of fear and peaks of happiness, back and forth, back and forth. Look how beautifully the underlying stock market sentiment turned just about 2 weeks ago, and right now is at a midpoint. It's in the middle of the road, a point of neutrality. It is not overly happy and it's not overly fearful. This is a great place to be because it gives us even more room for these underlying stock market mood swings to move down. And you don't see this when you look at the index. When you see where the NASDAQ or the S&P 500 is at any given time, you do not see these underlying mood swings. You only see it here in the Income Millionaire Insider. So given that these moods have come down from their previous peak of happiness, are now down at a point of neutrality, and may continue to get even more negative, let's use this to our advantage. Here is Marathon Petroleum. The ticker is MPC. We're arguably in the greatest economy, certainly of my lifetime. Certainly, we're in the greatest economy on the planet right now. Capitalism is back in the United States. Businesses are allowed to work again. Things are good. Smart people in the oil patch are becoming multimillionaires and billionaires right now. But we don't hear a lot about this, how great everything is, what's really happening, because much of the news doesn't want you to know, and much of the news is also focused on trying to assign a reason, a scapegoat for the market making a 10-point move, right? Assigning some reason or blame for the market being up or down on any given day. Meanwhile, our economy is as strong as it's been in 10 years, and the world is trying to follow in our footsteps here in America. Much like a child that puts on their parents' shoes and walks around the house, right? Kind of looks like Tom Hanks at the end of that movie Big, when he shrinks back to his normal size and all of a sudden his clothes are huge on him. The rest of the world is trying to following us. It's politically incorrect, but we call that Americanization of the world. The world is building out its infrastructure because they don't want to have to go down to their local shelter and charge their cell phone on the generator for their entire life. They want everything that we have, and they want it as quickly as possible. And this is the build out of infrastructure. And you know what? It takes oil, it takes gas, it takes a lot of it, and it takes more than we're producing even right now. So let's specifically look at Marathon Petroleum. The ticker is MPC. Now, do not confuse this with the sister company, Marathon Oil. That ticker is MRO. Marathon Petroleum is the upstream portion of this business with all the refineries and gas stations. MRO, Marathon Oil, is the downstream portion of the business, and they are searching for the oil and gas and getting it out of the ground. Marathon Petroleum, they're the nation's second largest refiner. They have about 5,600 Marathon branded gasoline stations in 20 states, and they also operate about 2,700 Speedway convenience stores in 21 states. In our opinion, a big mistake is being made right now in Marathon Petroleum, and many investors think that the stock is expensive. Why? Because it's up 150% in 2 years, right? Take a look at this chart. On the contrary, we think the stock is cheap, and here's why. When we look at the total all-in value of the company, which is also referred to as the enterprise value. Now, this enterprise value, it takes into account all of the company debts, all of the minority interests in other companies, and preferred stock shares. So all in, Marathon Petroleum is worth about $46.5 billion. When we divide that enterprise value, when we divide it by the earnings before interest, taxes, depreciation, and amortization, otherwise known as EBITDA for short, right? You guys have all taken accounting classes, which is just a measure of the company's performance. When we do that, we get a value, as seen here at the bottom of this page, of 7.88. And I'll tell you why that's significant. This means the ratio of company performance is very, very high compared to the total value of the company, which is fantastic. We hope and pray to find stocks like this. We love to see this ratio at 10, so we're happier than pigs and you know what to see this below 10, actually even below 8, which tells us a lot of upside room should exist here in the price of the stock. So when almost everyone else thinks the stock is expensive, we believe it's cheap. So we can see how well Marathon Petroleum has done since the 2016 lows, which is no surprise to us. We've been talking about this just natural ebb and flow cycle of oil for years, but it still surprises a lot of other people in the world that are just looking for chart patterns. The stock is a bit off the all-time highs, which I really like, but let's use our brains and let's get a better deal. We would love to buy this stock if it got down to 70 bucks a share. And in the meantime, as we're waiting for the crazy emotional investors to potentially drive the price down that far, let's make some money. So let's take a look at the July 20th, 2018 expiration of the options chain here for Marathon Petroleum. And let's look to sell the $70 out of the money strike price. This gives us the ability to buy the stock for $70 a share, which we are dying to do. We would be happy to do. But in the meantime, we're also instantly making money by selling a put option here, anywhere for about $112 to about $119 per contract in only 29 days. And if you want to do 2, 3, 4 contracts and juice this up, you absolutely can. But if we merely just sold one $70 strike price put contract, if we did that each month for a year, we'd be making about 20% annualized return, literally just for holding cash. Simply for holding the cash in our account that it would take to buy $7,000 worth of Marathon Petroleum stock, we are making potentially here 20% annualized returns just for using our brains. So let's look at the click by click to see how we would do that. So here we are at the Marathon Petroleum, the MPC options chain. We are on the July 20th, 2018 expiration, which gives us 29 days here as of the first day of summer, June 21st. And we're looking at the put side of the options chain. So we wanted to sell that $70 strike put, and we can see, the price is going up. I love it. We can get anywhere between $115 and $123 per contract. Now, we're only going to sell one contract here, but you can sell as many as you want to and take as much money out of the stock market as you need. So here we go. We'll start the transaction here. We'll click on the bid side, and then our little pop-up box comes up, right? And it kind of says, hey, don't screw it up. So yes, we're looking at the symbol MPC. We are looking at the July 20th, 2018 options chain. Yes, we are looking at the $70 put. Sell is already highlighted. As far as the exact price that we want to get as much money as possible. For time's sake here and ease sake, I'm just going to select that bid price because I will should about instantly get filled here. You really at home should probably put in a price somewhere, if you were doing this live with me, somewhere between the two. So maybe around, $1.19, even $1.20, maybe even $1.21, and just let it sit for a while, right? See if you get a better price. See if you get filled. But I'll just come in here at the bid price so I get filled. Yes, we only want this trade to go on for 1 day until the market closes, and we will click submit. Other box comes up, says, is this what you want to do? Yes, that's exactly what you want to do. I'd love to be able to buy this stock at $70 a share. We hit transmit, and there we are. We actually got filled at $1.19 per share. That's $119 that we just pulled out of the stock market. Congratulations. So let's stick with the midstream oil business. We're doing this because these midstream companies are in the sweet spot right now with shale oil and gas prices relatively low and gasoline prices slowly rising. Marathon Petroleum and this next company, Valero Energy, ticker VLO, can take advantage of these lower light sweet crude oil prices because they have since switched their refineries over to work with this light sweet crude and got away from the dirty, heavy, more expensive to refine heavy crude oil. They've gotten away from that so they can spend less money and use the better stuff. Valero Energy is the largest independent petroleum refiner in the United States. We believe the same mistake that was being made with Marathon Petroleum is being made with Valero Energy, and here's why. In our opinion, the mistake being made right now is many investors think the stock is expensive as it's up about 138% in only the last 11 months. On the contrary, we think the stock is cheap. Again, when you look at the total all-in value of the company, which is the enterprise value, Valero's worth about $56 billion. When we divide the enterprise value by the earnings before interest, taxes, depreciation, and amortization, of course, EBITDA for short, again, which is that measure of company performance, we get a value as seen here at the bottom of this page of 9.43. This means, again, the ratio of company performance is very high compared to the total value of the company. We love to see this ratio as low as 10, so we're very happy to see it come in at 9.43, which tells us a lot of upside room should exist in the price of Valero Energy stock. We can see how well Valero has done in the short amount of time here, which is, again, no surprise to us, but a big surprise to most of the rest of the world that is just searching for chart patterns. The stock's a little bit off the all-time highs, around $125 a share. I love it, but let's again use our brains to get a better deal. I want to make 3 separate options trades here. First off, we want to own the stock, but we don't want to pay a lot of money to buy the stock outright. So we're looking at a long-dated option here. We're looking at the January 17th, 2020 expiration and looking to buy the $100 strike price call option, which is a little bit there in the money because there's a pricing mistake happening right now. I don't know how long this will last. I can buy this option that's about $10 in the money and only pay about an extra $6 for it, which shouldn't happen. That's an anomaly. It's a mistake being made right now. So I'm buying time premium here. I'm buying some time premium here for free. And what's better than buying something for free? And I can buy it now for about $21 a share or about $2,100 per contract. We then want to instantly suck some money out of the stock market. So let's look at selling the September 21st, 2018, $125 strike price call option here and instantly make about $166 per contract. We're doing this because we would be happy to sell that long-dated call option that we just bought for $100 a share. We'd be happy to sell it at $125 a share because we'd make a lot of money. If we don't get to sell it, that's fine too. We collect our premium and sell this call again about 3 more times in the next 12 months. That's collecting about $664 per year and making about a 32% return per year because remember, we only spent about $2,100 to buy that long-dated contract. Let's suck some more money out of the stock market and look at selling the July 27th, 2018 $104 strike price put option here and instantly make about $140 per contract. We're doing this because we'd be happy to buy more of this stock at $104 a share. We can sell this just over 1 month to expiration put option another 10 times in the next 12 months. That's collecting about $1,414 annually and making about 67% this year alone. Combining making potentially here 67% using this put option strategy in the next year, combining that with the call option selling strategy, we're making about a 100% return just by selling these options. And this is how people become millionaires. Let's look at the click by click of how to do this. So here is the Valero VLO options chain here for buying our long dated call option. Here we are at VLO. We are looking at the January 17th, 2020 options chain. That gives us 575 beautiful days here to be right. We're looking to buy the $100 strike price call option here. And again, one of the reasons we're looking to do this is about $10 in the money. See here how, the colors change? This is a $1.10. Here we are about $10 in the money, and $21 is only about $5.50 more than what they want for the $110 call. So again, we're getting it's like paying $5.50 to get a $10 bill. That's what's happening here. There's free time premium. So we're going to click on the ask side here because we want to buy this call option. Up pops our box here. Yes, we want to buy the VLO January 17th, 2020 100 strike call option. Yes, we want to buy it. Here is our range here between 260 and 2165. As always, you're going to want to get the best price you can get. So I would suggest when you do this at home, putting this in somewhere at least at about the midpoint, if not a little higher. But as always, we're just going to put it in for the bid here for explanation purposes. So we get filled here, so we're going to instantly pay about $2,060 for one contract. We click submit. The other pop-up box comes up and says, is this all the stuff you want to do? Yes, so we click transmit. And we are the lucky owners of 100 shares of Valero stock for only $2,165. Let's take a look at the call and the put option to sell. So here we are with Valero again. We're looking at the September 21st, 2018 expiration. There are 92 days left, and we were talking about selling the $125 strike call option. And here we go. We can instantly make about 160 to 166 bucks here. And here are those easy clicks. Yes, we want to sell the Valero September 21st, 2018 125 strike call option. Yes, we want to sell it. We will sell it for the minimum amount here. As always at home, you're going to want to spend a little more time and get a little more money in here, but we will just sell it for that bid price and instantly make $158 here. We will click submit. The next box pops up. Do you want to do this? Yes, we do. And there we go. We just instantly made $158 with a click of a button. Now, if you want to sell more calls, you can instantly make even more money. This is selling that put on Valero here. So here we are with Valero. We're looking at a shorter expiration here. We're going to the July 27th, 2018 expiration. Only 36 days left of this contract. And we wanted to sell the $104 strike price put option here. We can make anywhere between $133 and $157 instantly. So let's do it. We click on that bid because we want to sell it. The pop-up box comes up. Yep, Valero, July 27th, 2018, $104 put strike price. Yes, we want to sell it. We will put in our bid here at $134. Again, you're going to want to get more when you're doing this at home, so give it a little time. Hopefully you have the time. But let's instantly make $134 here. Clicking submit. Boom, there's our other pop-up box. Do you want to do this? Yes, please. Absolutely. And there we go. We just made $134 by selling that put. How easy is that? We just, in 12 months, if we keep doing this, we can make a 100% return simply by doing these trades over and over and over again. And finally, Continental Resources, ticker CLR. In our opinion, one of the best oil and natural gas exploration and production companies out there. Continental Resources is the most powerful and profitable in the Bakken Shale region of eastern Montana and western North Dakota. But now, 40% of Continental Resources revenue comes from the Scoop and Stack region of Oklahoma, which is even more profitable because the pressure in the ground is so much higher than it is everywhere else, so the oil is easier to get out of the ground and therefore less costly. As seen in the top graphic here, CLR is continuously increasing its output, which leads to increasing sales and should have more output in 2018 than ever before. As seen in this bottom graphic, CLR is increasing its cash flows, allowing easier pay down of its debt and possibly increasing spending on the future new infrastructure projects. The paying down of debt is boosting its bond rating to investment grade, which allows it to borrow at lower rates, which lowers its borrowing costs. CLR's short-term debt is now completely paid off. Continental Resources is paying down debt, improving their balance sheet, doing everything right. We've talked about this stock for years and talked about it even more last summer as prices bottomed and then started to move up beautifully. This is a rare chance to get in while some confusion in the stock market and in the oil market is bringing down short-term oil prices. Currently trading at about $63 a share, we would love to buy this stock at $57.50 a share, and we would be ecstatic if we could buy the stock at $52.50 a share. Looking at the September 21st, 2018 options chain, we can sell the $57.50 strike put option here for about $238, instantly making almost 4%. With 92 days to expiration, we have the ability to do this trade about 4 times a year, making about $952, which is making 15% annualized just for holding cash. Are you making 15% annually right now in your checking account? Sticking with that September 21st, 2018 options chain, we can also sell the $52.50 strike put option for about $117, instantly making nearly 2%. Again, with 92 days to expiration, we have the ability to do this trade about 4 times a year, making about $468, which is making 7% annualized just for holding cash. When we combine making 7% annually with 15% annually on the other trade, we're making about 22% annually here just for holding cash. Again, are you making 22% annually right now in your checking account? Let's take a look at those trades click by click. Here we are at the Continental Resources option chain here, and let's look to annually here make about a 20% annual return. That is hard to beat. The Valero trade was even better than this, but this trade is very good. Here we are at the September 21st, 2018 chain here with 92 days to expiration, and we were looking at selling 2 different puts. We first wanted to sell the $52.50 strike price. This instantly makes us anywhere between $110 and $125. And then we wanted to sell the 57.50 strike price, which makes us even more money, anywhere between $225 and $250 per contract per click. This only takes seconds. Again, we're doing this because I would love all day long to buy Continental Resources stock at either $57.50 or $52.50. So we're already on the $57.50 here, so we'll click on the bid. Yes, please. I would like to instantly make $225. Yes, we are on the Continental Resources, September 21st, 2018, $57.50 put. Yes, we want to sell it because we instantly want to make money. I will put it in at $225. Again, you're going to want to put it in maybe somewhere around $232 or $233, maybe even more if you've got the time to wait. And we click the submit button. Do you really want to do all this? Yes, please. Absolutely. And we just made $225 beautiful dollars for using our brains to get a better deal. So let's look at that other trade here. Here is the $52.50 strike price. We're going to make a little less on this one, but we have even less chance of actually having to buy the stock, even though we'd be more than happy. So again, we're going to sell this put. So we click on the bid side. Yes, I want to sell the Continental Resources September 21st, 2018, $52.50 put. We want to sell it because we want to collect money instantly. I love sucking money out of the stock market. We are going to get this for $105 instantly by clicking that submit button. The other box comes up. We want to do this? Absolutely. And there we go. We just made $105 beautiful dollars by using our brains to get a better deal. Again, this is the June 21st, 2018 update for the Income Millionaire Insider, and we hope you enjoyed it. Go out there and make good deals.